Good morning and welcome to my review of Thursday, May 21st. I'm recording this on the Friday morning because I was last night bit busy. And thank you for all your feedback on the audio. 90% of you have said the audio is very clear, but some of you have complained about the lag between my voice and the video. So I did a lot of research on it, in fact, last night, and I found that because of the external speakers, the speed at which iPhone records and takes it up, and the external speakers, that causes the lag, and they are requesting me to download some Black Magic app or something else to fix that lag. Then I found that I've updated the latest iOS operating system 26, and it says that now the AirPods can be used as a microphone, and it avoids the lag because it's its own system. So I'm trying to try that out today, and pardon me, but I'm going to ask you for feedback on this also today. So using my AirPods Pro and in the camera using the AirPods as my microphone, they are saying that it should be much better. So do give me feedback. So to give you the review of the markets, well, the markets have stepped into this pattern where because the geopolitics is going up and down in terms of Mr. Trump and the Iran talks, you get good news, bad news, good news, bad news. Oil is the main driver, which is oscillating between say 103, 104 to 110 levels. And that has led to the dollar index strengthening, and the US inflation print makes sure that the US interest rates are at about 4.6%, and hence Indian yields 10-year also at 7.1. This macro setting has kind of set itself until we get a clear-cut direction of the war, because of which FIIs continue to price in the potential risks to India of oil remaining at these $100 levels, and hence they are not reacting much to the good news to do it. So their selling continues. So yesterday also they sold about 1,900 crores. On the contrary, DIS continue to be buyers. They bought more than 2,000 crores yesterday. And retail and individual HNI investors continue to be buyers. So you are clearly seeing a pattern. And I was looking at the 1 week returns also instead of 1 day and 1 month also. And across the thing, I'm finding that the mid and small caps continue to outperform the large caps. And in fact, small caps and micro caps are even stronger. So clearly, the market is in a pattern where domestic, looking at the domestic scenario, the earnings season being good. I've separately talked about that, and continuing to buy. So yesterday's advance decline ratio was 1700 in favor of the advances versus 1100 on the declines. So the micro cap and the small cap indices, the micro cap was up 1.1%, small cap was up 0.6%, but Nifty and mid cap ended flat. So this is the pattern, I think, until we get a breakout news on anything or any disturbing news. And sector-wise, what happens is that the retail obviously prefers cyclicals, right? So consumer durables, realty, auto. So whenever on the days that retail is not panicking and is sticking and buying, you're seeing the domestic cyclicals do better. Uh, when the FIs are selling, what is the pressure that felt? That's felt on the banking system, because that's about 30-35% of the index. IT and pharma are very reactive to the currency and the forward movements. So yesterday, what happened on the currency? The currency sharply strengthened after going all the way close to 97. It came back to 96.19. So 64 basis points currency improved because I think RBI intervened in the market to prevent it from being very volatile and going beyond 97. So as a result, the forward premium also came down today. And so you saw today IT was the worst performing index, and pharma also was so. So clearly, as far as IT is concerned, after 3-4 days of nice profits, there was a profit booking yesterday because they realized that RBI is not letting the rupee go beyond 97, and hence the forward reactions also has come down below 100 for a 1 year forward. So these are tactical decisions. Tomorrow, RBI may find that there is genuine import or demand and allow the rupee to go beyond 97. It's very hard to predict. So from a perspective of the market situation, I think what we've been adopting at a strategy is perfect, is to keep accumulating diversified, because on the day when there's retail panic, that corrects. So you can't keep predicting every day and keep switching sectors and all. So stick to the diversified allocation and keep at it. I'm confident that one day this war will end fairly soon, in my estimate, because I think the push from all ends to end the war. Iran is also suffering from the crisis economically in a very bad way. It's not that America is benefiting economy. There also the inflation is high and is suffering. So I think all parties concerned will seek a phase out and phase. The problem is that we can't say when that will happen because the holding capacity for the US is far higher, obviously, than Iran. At the same time, pressure around the elections building up in the end of the year means that there is a short window. So, and if Trump wants the Fed policy to have a rate cut, he has to bring inflation down. So, with the new Fed chair in charge. So, I believe that we are closer to the end, but very hard to say when that end will occur. And you can't build a portfolio very strongly with saying the war will end because until then, in the short run, you'll be facing challenges. So, my suggestion is to keep the same, all right? Accumulate, staggered, diversify. Thank you. And do give me feedback on how these AirPods as microphones are working. Thank you very much.